The Bitcoin is back at our major resistance. Fake news are circulating around the crypto market. Is this another fake out and we going lower, or can we break this resistance this time and continue towards $93,000? You will find out in this video. Hello ladies and gentlemen, this is Samo from My Crypto Paradise, and in this video we will go through multiple exclusive insights. One of them will be how spot ETFs inflows mark the crypto market top. We will take a look at the current trading sentiment, funding rates, and obviously I will share with you our ultra high time frame analysis, and then we will zoom in towards higher time frame analysis, and we will once again with the highest probabilities determine the next move of Bitcoin. So let's start with weekly time frame. This is ultra high time frame chart for us. Let's understand what is happening right now and what happened in the year 2021 and what's the similarities from which we can learn. As you know, history every time doesn't repeat itself, but it often rhymes. So what happened in 2021? We had this wonderful surge, right? Let's analyze the price action. So we had this A wave, B wave, C wave, D wave, and then final E wave, right? And then we had this ABC correction towards around $14,000. In 2023, we started this impulsive A wave, B wave, C wave, and right now we are in a D wave. Same as we have been predicting the move and upcoming bull market at 2020, we have been also informing you at around $19,000 that this bear market is finished and we are about to have a surge higher. So all this time right here, we have been approaching our swing trading strategy on a bullish scale. However, during the B wave and during the D wave, we are shifting bearish. And unlike during the impulsive waves, during the A and C and then the final E wave, when we are buying the dips and selling the local tops, during the corrective waves, we are doing the complete opposite, right? We are selling the tops and taking our profits at local bottoms. So the similarity is that the same way we are consolidating right now in this D wave, we have been doing that also in the year 2021. However, there are some few differences. One of them is the time frame. As you can see right here, we have been consolidating and the crypto whales have been distributing their crypto for a much lower period of time. Exactly, it's around 70 to 80 days, right? So this was around 3 months. However, right now we are consolidating in this D wave for extremely long time, and for many people this is quite frustrating. 231 days we are consolidating inside of this D wave. So let's go back right now. What finished this D wave? We also had, if I zoom in a little bit, we also had this kind of bearish structure, right? Where we have been creating lower highs after lower highs. As you can see right here, let me show you, lower highs after lower highs, and the resolution came after we got this breakout. And to where this breakout was, it was towards our Fibonacci retracement level 0.618, and let me show you exactly how I analyze it. It's very easy actually. We take our Fibonacci retracement tool, I put one pin to here, second one to the finish of the C wave, and as you can see, the D wave wonderfully finished right at the bottom of this Fibonacci level, and then we started the final E wave, right? This final E wave was very small, it was not much higher than the previous finish of C wave. In our case right now in 2024, I do expect much higher prices, much more volatile E wave, but let's take a look at what's happening right now. We are also consolidating in this lower highs bearish structure, right? Lower high after lower high, and we are still yet to retest this 0.618 Fibonacci retracement level. Again, how I calculated this 0.618 Fibonacci retracement level, I just analyzed this C wave, right? So I put Fibonacci retracement tool to the bottom of that wave up to the top, and as you can see, it's right here at around $44,000. Sentiment wise, what was happening right here, if you have been around, you know exactly well that on crypto Twitter everybody was extremely bullish, everybody was screaming for new all-time high. Every time we had this local top, you know, people were screaming, we are going to the moon, we are going to the moon, we are going to the moon. But the big money didn't come, right? That is why the crypto market makers needed to push the prices down towards this liquidity pool at 0.618 Fibonacci retracement level to get enough fuel again to move the prices of Bitcoin higher. And the same thing needs to happen right now as well. The question is, have we been able to gather enough liquidity at these local bottoms right here? So far it doesn't seem like it, because the same thing what happened right here at the local tops is happening right now also at these local tops. People, every time we are very near at our resistance line right here, people are just screaming for $100,000, $2,000, right, in Bitcoin. So everybody is waiting for this breakout to happen every time we get near this resistance, and because the liquidity is just not there, because every time we get absolutely overbought, the breakout cannot happen. Because how the big moves are being triggered is that everybody is in disbelief, like it happened right here. Everybody is calling for lower prices. That means everybody, the majority, I mean, the herds are selling at these prices. The big money, the smart money are accumulating on this panic selling, and then they can start pushing the price higher. Once they push the price higher, they start to put in the market more and more bearish news, so they can keep the people in disbelief. The majority is selling. They provide liquidity to the smart money to accumulate more Bitcoin without pushing the prices too high, right? And then the cycle repeats. The crypto noob starts to feel they are missing out. They start to buy near the top. At the peaks they go absolutely insane, absolutely crazy. They keep buying. The smart money can execute their sell orders, and then the market goes down again and the cycle can repeat. So if you understand how the big money operates, you can do much better trading decisions. So if you analyze the price action behind, for example, this latest weekly candle, we can take a look at our insider chart right here. You can see that this movement was clearly created by loads of leverage, right? Because right now I'm looking at Coinbase, at spot exchange, and we can see that actually $40 million was sold in here, all right? 666 Bitcoins basically. How would they be able to sell so much money without the liquidity of some crypto retail fear of missing out buying, right? There would not be liquidity. If the market makers would like to sell without it, they would just crash the market and they would not be able to make any profits, right? So they need to create this kind of FOMO to push the liquidity there, and then they can distribute their profits without moving the market too much. We can analyze these candles closer. You can see 38 million sold here, 5 million here in this candle. Like somebody heavy is distributing, some big money are distributing, and it's obviously not a retail, right? Because retail is extremely bullish. We can actually confirm that in our trading sentiment chart right here. The Twitter is absolutely going to the moon. Like we are at the actually above the previous two tops, right? We have been topping when the crypto trading sentiment was that high at August 19, at March as well. Yeah, pretty much every time we got this high to 0.8, it marked the market top. However, as a professional traders, we need to always calculate with all probabilities, right? So there is a possibility that actually we can overcome this resistance. This is the supply zone basically, right? Smart money starts coming in and we can finish this T wave without needing to touch the $44,000, and we can continue to our 93,000 ultra high time frame cycle target without the need of getting more liquidity lower first. For that we will be watching some new smart money inflow. We will be definitely doing it by watching the crypto market cycle, how the smart money operates. So we want to see the dollar index is going down while USDT dominance is going heavy to the upside, and then we also want to see USDT reserves not moving much while the Bitcoin is going to the upside. That's how we will understand, alright, new money are flowing to the crypto market, which is however right now not happening. Another confirmation will be that we will shift this MACD blue line above this red line. You can see that's exactly what happened right here at the end of the B wave when we started the impulsive C wave right towards our top at $72,000, where we started to shift bearish and we started to trade with a bearish strategy, but that didn't happen yet as well. We are close to it, but it's not crossed yet, right? So the confirmation for a reversal and confirmation for this D wave to be finished and we can start the E wave towards $93,000 will be first cross on a weekly of this MACD line and overcoming this resistance and this resistance as well. All right, overcoming, I mean closing a weekly candle above it. Then we will have a great confirmation that all right, the bulls and smart money are stepping in and we can continue the next impulsive wave. As a confirmation, we will be watching for that the smart money, how they operate. If we will see a new inflow of some big money, that will be another confirmation just on a weekly time frame. But then we obviously have smaller time frames as well. This is higher time frame daily chart for us. How this bumped towards $67,000 happened is that we have formed at our support a double bottom formation and then we started to break above its neckline. If you are reading our educational blog, you are absolute master of it. There is one confirmation and second confirmation of a breakdown of this downward trend line. With Paradise Only VIPs, we have been registering that very early on, so we have entered long position on Bitcoin. Recently we have taken our second target at $67,500 for smaller but say 110% profit. This was a great scalping target, right? Because on a lower time frame we have seen the bearish shift towards bullish, but on a high time frame and ultra high time frame perspective we are still bearish, right? Until we can reclaim firstly this resistance, and you can see right now we are correcting very high after we hit our second target with Paradise Only VIPs right here. We are correcting from this resistance. We have not been able even to sustain above this resistance for a 1 hour candle close, all right? Like this was, let me show you, this was like immediate. This is very strong resistance, let me tell you. And right now it seems like we are creating a bearish hammer candlestick pattern, which is very bearish. Let me go back on a daily time frame. On a daily time frame you can see that we are creating also a bearish divergence, which is bearish because the crypto market created on Bitcoin a higher high, however the indicator made a lower high. This is a clear classic bearish divergence textbook example. But anyway, we need to be prepared for all the scenarios, right? So if we can actually overcome this major higher time frame resistance without creating a bearish divergence, that will be another sign that alright, we don't need to move lower before higher, and we will start shift our swing trading strategy into bullish from bearish, right? But for that we first need to overcome this resistance, so closing a daily candle about $67,000, creating on a lower time frame some double bottom, and then we can trend higher. That will be a probability confirmation that a strong bulls are stepping in, but that's not the case right now. Let's take a look at the ETFs right now. I will show you what I mean by using the ETFs inflows to understand when the market can top. It's just another indicator we are using to just make better trading decisions in our long-term winning strategy. So as you can see, in the past few months, when the ETF inflows peaked, right after that the Bitcoin started to drop, right? So this green vertical line, that's the inflows, right? Peak right here, and the orange line represents Bitcoin price, and boom, we started to drop. Right here, peak of ETF inflows, and again, the Bitcoin started to drop. All you see on crypto Twitter is that ETF is buying, that's so bullish, but you don't understand this is a passive buyer accumulation, alright? They are playing on a macro scale, they are not a daily traders, right? So they are driven by momentum, so they are buying whenever they can, they are just accumulating for the macro perspective. However, somebody is using the liquidity from the ETF inflows to take their profits and move the price of Bitcoin down. As you can see right here again, ETF inflow peaks and Bitcoin crashing. Again, ETF inflow peaks, Bitcoin starts to crash, and right now we are quite high. As you can see, we are right now at this level. This was previously top for this Bitcoin price right here and right here as well. So we are in a dangerous level, and without any confirmation, just based on pure fear of missing out, it is a really unwise idea to go into some over-leveraged long positions. So right now you can see that what loads of people are suddenly doing, and they are getting liquidated. As you can see, the market whales absolutely love this over-leveraged liquidity. So loads of people all entered a short positions right here at around $66,000 with 50-60x leverage. They got absolutely smashed, and right now the market makers are going for the buying liquidity. So in your daily trading strategy, you absolutely need to check for the volatility all the times. And right now the upside liquidity is kinda cleared and we have a nice liquidity pool just below us. So it seems like for the market makers it will be very easy to keep pushing the prices down from here. So definitely all the fear of missing out long positions that have their stop losses and liquidation levels right here will pay their lesson. But it's just because the manipulation that's happening on the crypto Twitter, on social media, every time we get to the important levels like near the major resistance or near the support. So ladies and gentlemen, make sure you are playing it with a great strategy. Don't trade emotionally. Always wait for confirmations. And when entering any trade, always make sure that it is based on your strategy rules and with a proper risk to reward. I will keep you updated about the market situation in the upcoming videos. So for now, feel free to join our free Telegram channels, or if you want to start trading like a pro, I will see you in Paradise Simul VIP. Cheers!